Hello, Warriors. Alexander, Hugo. Hope everyone did okay with the Fed yesterday. Fed did have some impact. Dollar weakened. Hello, Sinatra. Gold broke out, went with it, already out. So let's take a look around. Hi, Gorshi. How are you? So this was a breakout in gold yesterday, right here. This candle held this like a rock for I don't know how long. And once the dollar turned, the metals took off. In fact, silver outperforming today. Kind of surprises me that this bear flag. Anyway, I went with the gold yesterday. I don't know if it's over. Why can't we take out this high? Hello, Galaxy. Take out this high right here. See it at the 830 level. Not sure where we're going as far as the target, but I would assume that we have some more downside until we get to maybe around 91.42 in the Dixie. And it's still the pound leading the way. The pound's almost at this very important resistance, but Euro hasn't gotten to where I want to sell it yet. You know, I thought we'd get to about 1930 to 1970, and my line in the sand is about the 120 level, but I still think this will be a bear market rally in Euro, and this is going to be a break to buy in another 60 points or so down here in the dollar. At least I'm going to try it down there. Hello, Monica. 1836 is 5. Okay, Scott. Scott's very good with his Elliott Wave program. Been watching him trade for years now. The yen, and this is something I want to bring Ryan in here. Yesterday, after the Fed, I went with the short here, and I've already covered. And Ryan, if you're there, so I mean, this goes with metals going higher, with U.S. dollar yen going down. I don't think we're done in the yen either. If you look at it here, you know, looks like we could get some type of 3 drive coming in at 860, and then you have some major moving averages on the daily, you know, right around this 107.80 level to 107.20, which would imply lower yields, but you know, yields are acting okay. They're still holding up. Ryan, are you around? Okay. Hello?
Yeah, can you hear me?
Yeah, I got you now, Ryan.
Yeah, sorry, a little late in. Got a ton of work to do, and I'm
okay.
Plowing through.
All right. I wanted to ask you, I kind of got from your conversation with Blake yesterday that you're a long-term U.S. dollar Japanese yen bull. Is that correct? Am I reading it correctly? And you're positioned on the long side for a long-term move?
Yeah, I did this back in September last year.
Okay.
Pretty so much on the.
Yeah, so that's a long-term bullish bias on U.S. dollar yen. What's the narrative behind it? Is it higher yields? Why do you have this kind of conviction to be holding something so long?
I saw this inflation stuff coming last year.
Okay.
We were talking about the fact, and pretty much the sentiment was that inflation is going to bite central banks in the arse for one of 2 reasons. The first reason being it's naturally going to come after we get over the virus and, you know, economies recover. And 2, because pretty much every central bank has been telling us for the last few years that there's no inflation. And as soon as they do that, that's when it's going to bite them in the arse.
Okay.
It was a bit more to it than that, but that was the basic premise.
Yeah. So, okay, that's a narrative. Do you have any type of long-term objectives in the end? You know, I know some Elliotticians that thought that, you know, we could trade a 120 handle or better.
Yeah, well, the main base, I look at long-term trade as I do most trades. I don't really pick a profit target.
That's right.
for me it was where do I get in? Where's my risk? I mean, I as usual when I do these things, I get a touch of the FOMOs. So I jumped in early around 106.40 and ended up buying all the way down, I think, to 103.10. That's my position. But if you want to flick to a monthly chart or something, you can have a look there. I have done some offloading as we got up to sort of the 108s, 109s, and 111s. But on the big wide view of things, the big level we've got up here, obviously we've got a sticky point above 111. The big level for me is up at 114, 115. That's just a huge series of tops up there.
I've looked at this monthly chart, and if you covered up the title and you just said, well, we had this huge move here and we've been consolidating for 6 years in this triangle, and we're knocking at the door of a breakout, which would imply maybe a retest or a new high. Look at the readings we had back here. It looks like we could, challenge 120 or something like that. So anyway, I was curious what was behind it, and it's always great when someone has conviction about something that's kind of like a fundamental trade that they're applying to FX. And so this is your inflation hedge, being long US dollar yen. Okay, interesting.
Yeah, cool.
Okay, and here's like I said, the other inflation hedges got a kick yesterday, and there's someone talking about 1965 LZs, talking about 1965. So we'll see. Take it a day at a time. We could just be correcting this still, and we'll see what happens up maybe around 1850, 1860. I didn't do any fibs on it, and really, I was going to time I don't want to be short gold when I still think there's some left on the downside in yen. And, it conflicts with my view on yields because I think yields have bottomed, but the yen looks like it's vulnerable during this time frame of weaker dollar. So if we're going to get down here, we should do it soon while the dollar is still heading towards 91.40, although that doesn't seem far away. And if we were at 91.40 already in the dollar index, I'd probably be considering some cable shorts, but it's not my style to short a confirmed high. But we are getting into some real important resistance longer term on cable right up here. Euro, not yet, not enough yet. I'm figuring we could trade maybe 1950 to 1970. So that's my view of what's going on. Of course, stock indexes looks like we should get a new high in the S&Ps. They haven't given up much, and we'll see if NASDAQ can perform the same. I still say this candle was important, but I also thought a couple weeks ago that the reversal week in S&Ps was also important, and it blew right through it. So we'll see what happens there. And I think that's about all I have. Canada's been under pressure, and the oil looks like it, doesn't want to quit yet. And Canada, I was thinking of around the 123 level to be looking for longs in Canada. So that's coming up too. So this dollar correction is already, I think, more than halfway through. And we'll see if I'm right on my theory that this is just a pullback in the dollar back to kind of a breakout level at 91.40, and that we're going to get another rally similar to this from here, and that could take it to 96. So I'll test out my theory with real money when it gets there. Anything you want to add here, Ryan, that you see, or any impressions, anything you got out of the Fed that,
I mean,
we're pretty much as expected.
Yeah, I've been a bit surprised the the strength of some of the moves that we've seen since the Fed. There's some moves saying it's a hawkish case because they've stepped closer to tapering. Others have said that it's dovish because they've said that things like jobs are still far away. In my opinion, it's the Fed just stirred the word pot around. Same thing, different language, and the market jumps all over it. But I've been surprised at the dollar sell-off.
Yeah.
Cable we know has been knocking around up there for the last couple of days, so that's not really a surprise.
Yeah.
Euro still in its short-term ranges, really. We know what it's like with the vol here at the moment. It's not in a hurry to go anywhere. But it mainly looks a lot like the yen's playing the games as well. Look at the yen crosses; they're all higher, and dollar yen is caught in the crosswinds of that. So it's not really showing an indication. Bond yields are up, and we're still seeing a bit of divergence between the inflation bonds, the tips, and the nominals. As we sit here now, US 10s are where we were sitting up at
126.
Yeah.
I was kind of thinking, Ryan, that maybe the yen washed out one more time down here for a third drive down here. My one trick pony 3-drive trade, right? So we'll see. It could hold here and go.
Another interesting one was the dollar CNH, the dollar yuan. We were looking at that the other day. I know Blake was looking at that, and we called a good trade yesterday on the back of it. We were talking about this 650 level. I was actually looking. I remember when we spoke about it last time, I was looking at longs off the 650 level to see if it held. But then the news out of China started coming out. There's some comments that Chinese authorities are attempting to calm markets, and then
that's crazy. First they upset markets, and then they want to calm them down.
But if there's one authority you want to move on what they say, that's the ones to do it, because they don't muck around. And there was a headline that hit yesterday on the wires saying that they had a hastily organised meeting with big institutions and foreign banks to calm nerves. As soon as I saw that headline, I just sold it, and I hit it at 650, 58.
Nice.
And because that was, to me, that was right. That's China really stepping in. We're not going up anymore. And it had a little bit of a flip around before the Fed, but now it's trading down to 646, and
nice
happy
trade.
days. And
that's
the effect of watching news. You watch a headline, you grab a headline that is important, and you jump all over it.
And you taught Adam Button everything he knows, right? On the news. I tell you, I really enjoy having you with us, Brian. I like your commentary and your demeanor. Great addition
your accent
to the team. Yeah. What's that?
I'm gonna get one of those voice changes. Thanks,
Dale. Like I said in that tweet, we finally sound intelligent having a British accent. Especially after listening to Steve, for the last 4 years. Someone said, "Who's that Russian guy you're on with in the morning?" Steve, if you're here, they thought you were Russian. So anyway, good morning to the rest of the team. How's everyone doing out there? Anyone else? With us,
hey, do you guys get are you guys getting a feedback loop?
Yeah,
I'm getting that. Yeah.
Okay, so somebody's got like
it's you.
A secondary source.
Oh, now it's fine. Now it's fine.
Okay, now it's fine. Okay.
Who did it?
So
it might be me. I don't know if my microphone perhaps is a bit too close
to
the thing, so I'll turn my volume
down.
All
right. Well, I take back what I said then.
But he does sound cool and much better than Steve.
Well, someone said, "Who's that Russian guy?"
Steve sounds like he has a Russian accent. Did you really say that?
Someone said, yeah, I listened to you, and was that guy Russian?
Anyway,
Steve will like that.
That's funny. I think Steve will get a kick out of that. It's interesting. Yesterday, I went into the and I know Stelios can talk about his trading too. I went into the FOMC long dollar Norway, and I got stopped out of that for, well, it was actually a slight loss on my position because I had added to it, but it was overall it was a profitable position because I took a lot off the table. It was when we were above 890. But still, I went in long the dollar, and I was thinking, man, just because it was trading at channel support. I'm like, if we would have got a dollar, a little bit hawkish FOMC, the dollar Norway would have been my optimum trade I would have been looking for. But I also rode the dollar yen up from 109.60 to 110 the day of, or the day before, excuse me. I bought it here and then I sold it up here, thinking I was going to hold on to it through FOMC. I'm glad I took profits though when I did, and so now I'm just kind of like I'm waiting for today's data. Now, if you guys don't know, today we have coming out in just less than 15 minutes. We have some GDP numbers coming out, jobless claims. The PCE is going to be a little bit more important now because remember, the Fed is really watching this inflation data. So the PCE data today is going to be very important. So that means, we're going to have to stick around. And I know your guest will be here just at the half an hour mark, but we might have to go over just a minute or two just to see what the data's given us.
Sure.
But today's data should be important. I want to cover just a couple of things before I let Stelios kind of update us on what he's thinking. The dollar actually has stopped at some pretty key levels in some pretty key pairs overnight, because if you look at the dollar index, and Dale, you were just talking about the dollar index, finding some support somewhere down here. We're at
91.40-ish.
Yeah, we're at well, yeah. I mean, that the 91.40 would be right through here. And matter of fact, if you just grab the high, you take the low to the high, the 91.40 would be the 50 back, or the 50% retracement would be there as well. But what that is also is really just key horizontal support, right?
Yeah.
Previous flag pattern support. Now, we are at horizontal support right now at this 92 level, but look where we're at with a lot of these currencies. Now, the cable did break high overnight. I actually took a small loss on this one. I tried trading short into this this trend line overnight, but I was like, yeah, it's a small position. I'm willing to take a little bit of risk. But look at where the Aussie stopped. At the 70 cent level or 74 cent level. We've been waiting for this for a long time, for days and days and days. I've had my order out literally for the last week. I want to say it's been a week and a half, but I've had my order out to sell the Aussie at 74.10 forever. I got triggered overnight on a short. You got the Kiwi that's having a real tough time with the 70 cent level. The dollar Canadian broke through channel support, but we're at a 618 retracement. The US dollar Norwegian krona has dropped to its breakout point. So the dollar is at some pretty key support levels here, especially against some of these commodity currencies. And when you take, Amanda was in the chat room and she was saying, I don't see why the S&P 500 shouldn't get to 44.40, which is the 127% extension that we've been talking about for the last couple of weeks. And even if we break higher here, the wedge resistance comes in at around the 161% extension. At this point in time, as long as we continue to hold that 43.80 level, I don't see any reason why we can't. However, the question you have to ask yourself is, why the hell are stocks not up there right now after having the Fed dovish once again, giving zero support to any hawks out there? If you thought that the FOMC chairman was going to be a hawk for once, didn't happen. So why hasn't the stock market rallied to new highs already? And you can start looking at earnings and and whatnot. And, but I'm
Yeah,
telling
maybe
you,
it won't, Blake. That's a great point.
I mean, you're starting to, I'm starting to sit here go, well, anytime now, we should be trading above 44.50. We should be trading closer to 4,500 right now.
Plus, it looks like they, that infrastructure deal, they have many hurdles, but they got something.
They got something done. It was well below expectations. Maybe that's
but McConnell's on it too, so he's supporting it.
I think the market's always known that was going to happen, but it's like the numbers aren't quite what the market wanted. So maybe that's it. I don't know. But
yeah,
look, after Jay Powell was as dovish as he was, and the dollar acted appropriately. The dollar came off. We were trading at triangle resistance and up around these highs, and we couldn't break. So of course it's responding appropriately. But you have to admit that the dollar's holding up still really well based on where stocks are at. And so, I'm a little worried that, stocks are, losing some steam here. There's no reason to be bearish yet, but you got to be a little concerned that it hasn't really gone,
Blake,
higher. Yeah.
Sorry to interrupt. Don't worry.
No, please.
It's early. Stell's going to say it's early.
The infrastructure deal is going to get through. Stocks are going to like it. The debt ceiling is going to get raised. I don't know why they call it the ceiling. It should be called the debt level. But anyway, it's going to get raised. The market's going to rally. Then we're going to get something like a headline. Oh, China, we're going to do this and that with China. Then it's going to, what it's like. It's been like this for years. At some point, it's going to stop. But at the moment, with the Fed this dovish, I don't see it. I really don't. I'm not saying I'm not saying get long up here, but you know what I mean.
No, I hear you. I mean, the Fed is dovish. Why aren't we substantially higher right now? That look at here's the Fed meeting. Maybe stocks are just going to go. Maybe stocks are just going to go up today. I mean, maybe it's just a delayed reaction. But how come? Oops, I meant to draw that here. How come we have not? How come we have not broke out of that candle from yesterday? I mean, why? Why not? Why are we not higher? And I'm sure you got the market. People are leaning on the market right now saying, oh, screw that. I'm getting long. That was a dovish FOMC. The Jay Powell is super dove. Why aren't markets going higher? So probably everybody's piling in equities right now as they normally do as you come into North American trade. But again, I have to take a step back and say, why? That doesn't mean I need to start shorting the stock market here, or I need to start shorting risk, like getting long a bunch of yen right now. But I am sitting here scratching my head. And then also one of the other things that I was looking at this morning too is you had crude oil broke out of this bullish wedge. We've been monitoring this bullish wedge. We've been knocking our head up against it. We finally broke out overnight, and here we are, right back at the breakout point. So why isn't crude rallying? Why is copper coming off? And
you said sell it yesterday, and it went on Reuters, and everyone front ran.
Right. No, these are just things that are, they are of concern. If you're buying risk right now, and you're selling dollars, you're because that's how you're expressing your long risk trade. You're selling dollars and blah, 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 blah. I mean, I look at all these things and I'm like, I don't know how comfortable I would be, being short or a long risk, excuse me. So anyway, so what do you think about what happened yesterday?
Well, just to finish up on equities, I think we're still at the stage where if the music's playing, you have to dance. What are they going to do when the market's open in an hour?
Yeah,
they're going to come in and buy it, I think. So I expect the first hourly candle to take out that candle that you showed before. So the Fed, they were dovish. If you guys remember, I said I was going to be short treasuries going into it. So I bought the ETF TBT. Dale knows it. It's a double leveraged 20-year short treasury ETF. I bought it at 1755. They came out dovish. Actually, that ETF didn't really move much, so I got rid of it at 1752. I lost like 3 cents, which is like 0.1%. But think about it. What I really liked about that trade was the risk reward. I did say,
yeah, I mean, that's what it's all about, right?
Yeah,
Still, just
the
always
most probable outcome was what happened. But if that outcome didn't happen, I always thought that it would have been a more hawkish surprise. And if that had happened, then you lose 0.1%, you probably make 2 or 3%. Yeah, I like those.
But
those
look
odds.
at where the 10-year's at right now. I mean, we're back to where we were yesterday.
Yes. So the 10-year and equities are not quite sure yet. They don't seem to be sure.
Yeah, exactly.
Unfortunately, I think we're going to grind. So I think yields are going to grind lower and equities are going to grind higher. And we go back to the usual. Remember, it's end of month as well, or coming up to end of month.
Yeah.
So
and by the way, just so you guys know, I mean, this has been just coming off of trading for the guys that I traded for the last 5 years or so, and we still all email, even though I'm not trading for Gelos like I used to. I still email those guys several times a week. We all communicate and whatnot. Just so you guys know, end of month and quarterly flows are not like they were a year ago and prior. You don't get dramatic flows anymore because they work those orders through throughout the week. Like we've been seeing a lot of dollar selling coming in right around the London fix the last couple of days, and you're going to see orders get massaged. You're seeing all this flow get massaged throughout the week. It's not so much like a year ago, 2 years ago, 3 years ago, you'd see end of month, end of quarter flows. They just boom, they hit the market, and you get a 100 pip move like on the last day of the month or last day of the quarter, right at the fix. You're not seeing that anymore. A lot of these orders are just getting worked through the market that week, but that's probably a lot of it though that's happening this week as well. You're getting a lot of those end of month, end of quarter flows that you were talking about, Stel. So.
Yeah. The other thing to mention, we had a little bit of data. Might as well talk about that. We got German unemployment, which ticked down 0.1% to 5.7%. But more importantly, we got German CPI, which year on year from last month's 2.3% went up to 3.8%. And I'm sure this is something that the ECB is going to be looking at. So, inflation is there. Is it transitory? It's the billion-dollar question.
Looks like we're going to find out. And it's interesting. Actually, Powell was when he was talking yesterday was talking about transitory, but actually, the one thing that we have to realize is inflation has gone up dramatically. It's not going to secede. It's not going to pull back, if you will. These inflationary pressures they're permanent. The trajectory. He was talking about basically saying that the trajectory of inflation that we're seeing is transitory. But what he was trying to explain yesterday is, as eloquently as he could, is the inflationary pressures that we just got are here to stay. And I don't think the market really understand, or I don't think people really understand that concept yet, that you see it in consumer products, you see it all the way around. Like, my son, I'll give you an example. He has a used car, and his used car is actually 30% higher in value just in the last year.
Sell it.
And well, that's the thing. He goes, "Well, Dad, should I just sell it and buy it back cheaper?" I'm like, okay, your used car is not a cryptocurrency. It's not. It's not your used car. You could sell it now and make a profit, but you're gonna have to outline that same amount of money to buy a car for the same amount later.
He can walk for 6 months. He could have you drive him around for 6 months till there's a decline.
The data is coming out here.
It's coming out in 5 seconds. Yeah.
So, well, anyway, all I'm trying to say is the rate of that we see in inflation may be transitory, but it's gonna stick. Yell out the numbers if you guys see them before me.
Jobless claims slightly worse. We don't care, not a lot, 20K
No.
more, but
How about this
I don't see
advanced
the
GDP
others.
number? I mean, the dollar is weakening right now, so it's probably probably a little shoddy of a number here.
There goes the yen.
Yeah, there goes the yen.
6.5 on the GDP,
It
less
is
than the
weak. Thank you
8.5
very much.
expected.
Thank you, Ryan.
Jobless claims a
6.5.
bit softer. Continued claims 3.269 versus 3.116 expected. That's high last week as well.
Got it. All right. Yeah, 6.5% on GDP, well below the 8 and change that the market was looking for. So, I'm going to see if the euro will make one more stretch towards the 618 retracement. We were looking at a break above the 38% retracement, which was 118.40, giving us a move to 118.91 or 118.90, which is we're pretty much there. So I think this could cap the euro today. Plus, we had that some stronger inflation data come out of Germany as well. So I think that's probably where we're going, at least for today. So let me mention one last thing, Dale, before you take over. Hey, guys, remember, you guys are now listening to Ryan from Forex Flow Live, who is now, from, if you guys don't know, this is Ryan here, Ryan and his team, right, at Forex Flow Live. So he is now his team is now part of Forex Analytics. If you want to take advantage of, our bigger, stronger, better team, but the same prices, actually more of a discounted price because we are offering a discount to allow you guys to be part of our community. The premium discounts are buy 1 month, get 1 month free. And then we've given semi-annual and annual discounts to those longer term clients that want to be part of our community, that want to take advantage of these prices, which we get a lot of. So make sure you join Forex Analytics, download the mobile app, come join in our chat rooms. And we have multiple chat rooms now, not just the old Forex Analytics chat room. We have multiple. So come in and join us. We'll see you there.
Forex Flowalytics.
Forex Flowalytics, is that what you want to call it? That's a good one.
It's a combination.
All right, I like it.
All right.
All right.
Anyway.
All right.
All
See
right.
you guys.
Good luck today, Blake. Thank you.
Thanks, guys.
Ryan, Stell.
Cheers,
Glad
guys.
you're feeling
See you
better,
soon.
buddy. I'm echoing now.
Hey, thanks, Gene. Nice comments. I appreciate that, buddy. Good to see you, by the way. I haven't seen Gene in forever. Good to see you. All right, gotta go.
Okay, thank you. Thank you, Gene. And Christopher, welcome to Face. Really nice to meet you. Waiting to hear you. I see. Okay, unmuted now. Can you please unmute, Christopher, if you can hear me? I still show you mute. I'm asking, you need to unmute, buddy. It'd be on the lower left-hand corner would be your mute button. Waiting for you, Christopher. Who's sharing right now? Velu, can you unshare? Okay, Christopher, I thought maybe you'd been in Zoom before. Was looking forward to talking to you. What a great day to talk to a hard money guy. With the metals flying today after the Fed. I don't know how to assist you. Can you text me something, Christopher, and tell me what your problem is, what the issue is? Maybe I could unmute you. Christopher going once, twice. Velo, can you stop sharing? Maybe that's the issue. I wonder if I make you co-host. Okay, let's try this. Christopher, can you hear me? Okay. All right, it looks like we'll have to reschedule this.
Hey, Dale, you there?
Oh, yeah. Hi, Christopher. How are you?
Hey, there we go. I heard you guys still going a few minutes ago. I thought I'd give you a few minutes to finish up.
Oh, okay. Well, so you walked away. All right. Bueller. Anyway, Christopher, great to meet you. Welcome to Face.
Thank you, Dale. Great to speak to you.
Okay, so you want to share your screen? You ever used Zoom before?
Yes. Let's see.
Okay, it's that green box. Nice action in the PMs today, huh? I know you like that.
Yeah, it is. Let me see. Let me share this. Can you
Okay.
see
Yeah,
my
got
screen
it.
now?
Yeah, have
You see all the
some.
charts there?
Yeah, nice terminal wedge on that. What is it though? CRB. Okay, CRB, US dollar. I don't know what you have above it. Another
Yeah.
terminal
So where
wedge.
do you want to start? You want to start with the
Well, you know what?
metals,
I
or?
want to start with what was your entree into the investing, trading, consulting, market industry? What were you doing beforehand? And tell us a little bit about your journey, and then we'll get to the markets.
Yeah, sure. I was in military intelligence for my first
Oh,
career.
I saw that you were you were in charge of drones.
Yes, that's correct. Yep. And it was a
Okay,
pretty hot issue over the last number of years, But anyway, spent some time in Iraq and Afghanistan. And, when you see that happening with your own eyes, if you're an independent thinker, that leads you down some other paths
Rat,
of, yes,
rabbit
exactly.
holes.
Yeah. Well, you start to, you know, even as a patriot, someone who loves this country and loves freedom,
Yeah,
you start to observe that the amount of waste happening overseas in the unwinnable nature of the wars was unsustainable. And then you start to look at who's responsible. How is this being allowed to continue on
yeah.
financially? And it leads you to the Federal Reserve. It leads you to the study of fiat currency. It leads you to precious metals.
And the military industrial complex that
Exactly right.
Eisenhower warned us about. I mean, I recently watched Tom Cruise again. It's a bit depressing, the movie Born on the 4th of July. But so what you experienced in the Middle East, our soldiers have been experiencing for years. A lot of Vietnam vets went through the whole thing. If you watch a movie, Tom Cruise was, middle America, patriot, ready to lay his life down for the country to stop the domino effect of Vietnam falling to communists. So,
Yeah.
yeah, and you were going to stop terrorists from, hitting our home shore again, and
Yeah.
which they never did. So, I mean, maybe
Yeah.
we were successful in some way. So
It's
yeah,
it's
so
true.
you look at this and it led you to gold. I'm curious, what is iGold? Does it have something to do with an internet form of it, or
The I stands for independent, fully
okay,
independent of all dealerships, all companies, all other firms out there.
okay,
Able to speak my mind, in other words.
yeah, okay. So when there are times that you don't think gold is a buy, that it's going to get cheaper, you don't have to pound the table and say, this is what gold guys say. Have you ever heard
Correct.
this?
I have no
Don't
problem saying.
wait. Don't wait to buy gold. buy gold and wait?
I have no problem saying what needs to be said, whether
Okay.
it's higher or lower.
Okay. All right. So why don't you give us your view? Dollar under pressure, Fed, still trying to be as dovish as possible. Silver has been up until today underperforming. Why don't you
Yep.
just tell us what you're seeing in the charts and your interpretation of it, Chris?
Yeah. Thanks, Dale. So the big, I mean, you got to separate sort of intermediate term with long-term trends that are clearly visible. And so, for example, the chart that we're looking at right here on the bottom in green, this is the dollar index. The last 20
Yeah.
years of the dollar index. And you can see there's clearly a rising structure to the dollar index going back from the lows in 2008, functional double bottom here, 2008 and 2011. Clear rising structure, with strong horizontal support here in the 88 to 89 region. But if you notice here, just back about 1 year ago, the structure of that rising channel broke down. And so, according to our model here, when you have a multi-decade rising structure like this that breaks, it doesn't necessarily mean that the market has to collapse immediately, but it's showing you that this market is in the process of shifting. You have a 10 to 12 year rising channel. You could then have as a net sum here from 2015, let's say, extending out into the mid 2020s, range bound, and then you expect this thing to roll over middle or later part of the decade. And then if you just come up with me, and we're looking at the exact same time frame here, I have these on same time, separate charts here. You look at the CRB commodity index, and you just see, now it's not a mirror image, but it is a separate significant bottoming pattern. So you had a rising pattern, and then what's developing into a breakdown in the dollar.
I was thinking on your dollar chart, sometimes a lot of markets will come back, Chris, and retest the breakdown. And if we rallied to the trend line that we broke down out of, it looks like about 96. That's kind of what I'm looking for during this bear market rally. It's a nice look. It kind of reinforces what I was thinking in my own charts, that we could get to 96.
This is exactly what I'm anticipating to happen here over the next 12 to 18 months, is a bear market rally in the dollar, somewhere up here around 96. I mean, and sometimes on these long-term charts, you will even hug the lower boundary of the trend line for a while. That could come up even to 98 or something into next year. And so, but the bigger picture though is, if you look at, so that was a rising structure that broke down in the dollar. You can see that anyone who's not looking at this is just flat out ignoring the most visible trends that are available in the market. You look at the sum of the commodity complex here now, where my mouse is, and you're looking at from 2008. Notice 2008 matches the low in the dollar. So 2008 was the high in commodities. And you had it wasn't a channel, it was a major terminal wedge. You're talking a 12-year terminal wedge, little false breakdown at the bottom. And look, this thing is now breaking upward. Now, the thing is that after you have a 12-year bear market, so this is where we get into from long-term, where I think commodities and hard assets are bottoming. And maybe we'll talk about gold and silver in a few minutes more specifically. But you go from long-term, where commodities are breaking a bottoming pattern, to more what should be expected, though, as this is going to play out. You don't go from a 12-year bear market to a bull market immediately. This thing is not just going to keep going higher in a straight line like that. Somewhere in here, it looks like in the range of 200 to 230 is a pretty good resistance level. You had that peak back from 2015. You got the 38.2% fib retracement up here at 244. So we're in the window here for a peak to form. And then I think this bottom, which represents the last part of the terminal wedge going all the way back to 2015, I think these kinds of waves, you have these 1 to 2 year waves every couple years. I think we're going to get another few more waves like that here. Let's call it in the 150 to 230 range on the CRB, extending into the middle part of the decade. That entire thing is going to represent a giant bottoming process. It's just that it takes some time. You know, you don't just like the dollar is not going to, once it breaks that trend, it's not going to
I don't think
collapse.
it's going to take as much time as you think. I think it could be by the end of the year. The things
Interesting.
that you're talking about by mid-decade, I think we could get a commodity correction, which is already underway, completed by the end of the year.
Yeah.
Don't you think that the commodity correction will end when the dollar takes out after the dollar rally is over? And I don't think that's going to take that long for the dollar to, rally up to your point and then start to roll over again. So maybe mid-decade, but I'm thinking things kind of speed up in this world.
They do. Yeah. The only reason why I'm looking at a cycle potentially like that is if you look at these cycles here in the dollar,
Yeah,
2015 to 2018, that was a 3 year cycle. 2018 to 2021, that was a 3 year cycle. So I'm wondering if this is going to end up being basically a lopsided head and shoulders where the upside of this rally is about a year to a year and a half, and then the downside is a year to a year and a half. And that forms like a three-headed top here.
okay. All right. So who taught you charting? Are you self-taught?
Self-taught, yeah. It's I was a cartographer when I was working on the drone program, and
Yeah,
specifically relaying pattern of life analysis from the drones to the military commanders, in real
yeah,
time.
yeah.
And I basically um, had to annotate things for the military leaders in just a very clear, what's the bottom line? What do we need to know? What are the important things? We don't have all day to talk about extraneous stuff. What are the key takeaways? So I apply that to the financial markets.
Okay. All right. And I like your charts. So, okay, we have commodity prices covered, and the Fed can't print corn. So we
Yeah.
know if we have food shortages and food insecurity, there's really nothing the government could do about it. It's about Mother Nature, God growing and competing with the Chinese for grain stocks. So,
Yeah.
um, what else you seeing here, Chris? You have some charts beneath it that you want to show,
Yeah,
or
we'll just talk about a few other things. If you're following this kind of thing, if you can understand that in commodities themselves, we are, whether this correction is going to be only a year or whether there's a few waves to come in here. Either way, if this is a long-term bottom that's setting up, I am very involved, and I think investors should really consider the small cap commodity producing companies, which are mostly listed up in Canada on the venture exchange. And if you just look
is
at
that
the
in Vancouver?
similarities, I'm sorry,
Vancouver, the venture.
they're either Toronto or Vancouver. Yep.
Okay. And are
Yep.
these exploratory mining companies?
Either exploratory or development stage. Some of them
Okay.
have defined deposits and they're working to advance those.
Okay.
And so the Canadian Venture Exchange Composite, which is what we're looking at here on the top, this is it. This is the entire history of this since inception in
Is it
'99.
an ETF, Chris? Can
This
you
is not
trade
an
it?
ETF. That's it,
Okay.
it is not. That's the hard thing about this. There is no ETF that tracks
Okay.
these companies. Most of
Okay.
these companies have market caps of less than $50 million.
All
So
right. So they're micro caps.
they're micro caps.
Okay.
And I just want to suggest that what I am almost exclusively involved in these days, as far as how I'm allocating capital myself, is
Yeah.
in private placements in the commodity developing companies here, where not
Wow.
only are you, trading futures, let's say, or options on the commodities themselves, but you're getting something that gives you free warrants also. Every time you do these private placements, you're getting free warrants. And if you just look at the similarities between the CRB here, 12-year terminal wedge, Canadian Venture, 12-year terminal wedge, this is no random
They look
coincidence.
identical.
It's for all practical purposes identical. And what I always say to people, whether you're talking CRB or Canadian venture, when you have an index that fell by, what is that, 80, 85%,
Yeah.
it cannot go to zero. An index is never going to go to zero. You have taken out so much of the risk here. It's not even funny.
Yeah. I
So
like it. And since you're self-taught, you're gonna have to go through a pop quiz right here, Chris.
let's do it.
All right. What is the normal or the rules for wedges? How much do they retrace?
Oh, in my experience, the most bullish wedges will break and then never actually give you a proper retest of the upper boundary of the wedge. That's the most bullish scenario. The most conservative scenario is what we've seen here in the venture, where you get not only come back to the breakout point, you actually get lower retests, but the key is that the boundary of the upper resistance zone never gets violated, even though you're actually lower than the breakout point.
Right. So my question is, what's the upside potential now that we've had breakouts out of these wedges?
Oh, I mean, you could come back to we will come back to the former all-time highs.
Well, that's a rule. Okay. You get a smiley face. That wedges can retrace 100% of the move.
Oh, absolutely.
Okay,
and
that's what I teach. So
there we go.
Okay. So I mean, you're talking about massive gains over the next 5-10 years if you get properly positioned for this.
That is right. I'm
Okay.
super excited. This is just simply what I'm doing with my money and with our firm, and we're looking for value in hard assets. It's tough to buy a futures contract and hold on to that for 5 or 10 years. You know what I mean?
Yeah.
But if you've got some assets in the ground that you can get shares in, and you got to diversify properly, because even in a rising market, some of these companies are going to end up going under. It's just how it works with these micro cap companies. But if you diversify into 10 different companies and you're picking up warrants also for free with every deal you do, it's just
and the illiquidity of a private placement. I mean, I always ask myself, if it's so good, the deal's so good, why are they offering it to the public for private placement, which is completely illiquid? You really have to have confidence in it, and it should be, don't you think, risk capital to go into a private placement?
Absolutely needs to be risk capital. Yeah, it's very different from physical precious metals holdings, which I would consider like a savings account or an emergency fund. This is risk capital for sure.
Okay.
This is like you want to try to hit a home run capital, but you could afford to part with it.
Right. Okay. I appreciate that. We have a couple minutes left if you want to discuss anything else.
Yeah, so here's why I think a cyclical correction, though, is coming up first. And you can see it now. I don't think this is going straight higher. And so if we look, for example, at silver, I've changed over here to let's see. Okay, so we're going to look at, this is the silver miners on the top. This is an ETF.
Yeah.
And this is the price of silver bullion here on the bottom, same time scale, late 2015 through the present. Notice that silver had gotten almost $10 above its 2016 peak here. Notice this.
Yeah.
Whereas the silver miners were below their 2016 peak the entire time. And so now if I go to my actual spot, this is my trading platform, my actual spot silver chart. And we want to look back, let's say the last year and a half. Unfortunately, this triangle here in silver has just broken down. You can see that right where my mouse is. And if we zoom in, right now we're getting that second retest of the broken trend.
So what are you looking for? 22 back to support?
Yeah, I would be looking at least for 22. However, the measured move for an amplitude like this subtracted from the apex is down at 18.5.
Okay.
So worst case
God, I'll back up
scenario
the
is,
truck there.
yeah, oh yeah, this would be a total back up the truck. And if you want to talk about how that looks on the super big picture, there we go. You know, it's basically you'd be coming back to retest this final part of the channel of the bear market. You'd be coming back somewhere in here. Whether it's 22, I mean, this pattern could stop at 22. Whether it's that or whether it's 18, either way, we're going to have really good accumulation opportunity in there. But I do want to sort of warn people that it looks like you read the message here of the silver miners that refused to break upward. You look at the break in that triangle and silver itself. You know, we could have 6 to 18 months of weakness coming up.
Okay. All right. Let me see your SILJ, the junior silver miners. I saw you pass that up.
Yeah, we had that
a
back
second
there.
ago. Okay, there you go. All right, so
The
that's
same-
already broken down.
It's broken down, and you're getting a retest there. So you know, I think
Be a
there's
great buy at about $8, huh?
Yeah, exactly. You
$8,
do a measured
$9.
move of this consolidation here below the breakdown point.
Unless we negate the breakdown here, Chris, in the next week or so, what if we start trading above the breakdown line?
Hey, nothing would make me happier from the intermediate perspective. That just means you jump back in with both hands
right
now. Like as soon as we get,
because you've seen those before, right? False breakdowns out of trend
absolutely.
lines. Okay,
Absolutely. Nothing would make me more pleased for the short term. It's just I like to stick with the visible bias until proven otherwise.
Okay. Well, I'm really glad I reached out to you on Twitter, and what an interesting journey you've had, and you have a lot of conviction. And if you want, you could show your website. I went there for to kind of check you out, and you know the best way for people to get in touch with you and follow your
Thank you,
work.
Dale. Yeah, I appreciate that. So the website is the letter I and then goldadvisor.com. We do weekly videos for subscribers that are similar to the interviews we're doing now, but a lot more in depth every single week. Flash updates, all that good kind of stuff that goes out to you. One other thing, Dale, I thought I would show you. I think this is really interesting. If we want to switch to the Euro USD for a second.
Yeah.
If we just have 2 more minutes here, I don't think many people look at this. I want to show you the super long-term perspective on Euro USD, going back 1975. So remember, even if we're talking about, and so Euro USD is mostly going to be inverse of the dollar index.
Right.
But so even if we're talking about, let's say Euro USD needs to come back here and retest this broken blue trend, look at the big pattern here. This is from the late 70s. This thing is gonna.
That's when it was a Deutschmark, right?
Exactly right. So you've got Deutschmark superimposed over over Euro here back before 2002. But if you look at it, what is this? Relatively flat resistance, rising support.
Yeah.
This is a 75-year ascending triangle in Euro USD.
Yeah.
This thing, at some point in the early to mid 2030s, is my best guess, is going to break upward, and then you're going to get a target of somewhere around 220 euros, $220 to the euro.
Wow. Okay, I could see it. I could see new highs anyway. So, great interview, Christopher.
Thanks, Dale, very much for having me.
Yeah, we'll do it again. What do you say?
I'd love to.
And you know what? You know that since you and I had no doubt you would survive an interview with me, considering your history. But and this probably fits you more than most. You're now my trading warrior brother.
Hey, thank you, man. It means a lot to me. And maybe on the next interview, we can get into a little bit more of your history as well. I'd love to hear more about your background.
Okay, well, you could always interview me on your website if you'd like.
Okay.
You
Good
know, I'm
deal.
open. Turnaround is fair play, right?
Absolutely. Yep.
I go either way on a mic, Chris.
Okay. Good.
Only a mic. Okay.
Yeah. I hear you.
All right. So good hunting. Thanks so much for your time today, Christopher, and I'll be in touch with you, and we'll set up a follow-up date for the fall. How's that?
Okay. Sounds great, Dale. Thank you very much.
All right, everyone. Christopher Aaron, and you can check him out on Twitter and also on his website. And looks like he has some people that he works with. And if you're a hard money person, looks like it's going to be a nice website for intelligence gathering. So that's a wrap for me and you guys. Remember, don't just count your coins or your bars or your bags, count your blessings. And we'll see everyone to wrap up the week for TGIF. Thank God I found Forex Analytics. And you could join the guys in 15 minutes for Morning Edge. Adios. Thanks again, Chris.
Thank you, Dale.